El mundo quiere dinero. Yeah, 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 yeah. Money work, money work, money work, money work. Se arregla con dinero. Money work. Lunes. Lunático. Yeah. Lunes. Money work. El mundo quiere dinero. Money work. Se arregla con dinero. Money work. Si me quiero educar, dormir en algún lugar, un lugar para trabajar, y si no hay para emigrar. Todo money, money, todo el dinero. Solo un par de gente se lleva el botín entero. Money, money, pasa verdadero. Si tienen lo verde siempre llegará primero. Pero llegaremos antes o después. Solo a lo suyo, que Dios te lo ve. Que por más que tarde lo veré caer. Somos malos buenos y tenemos fe. El dinero ya lo veré. Yo vendo mi alma, lo lograré. Seré el más grande, no olvidaré de dónde vengo ni cómo voy. Money work. Yeah. El mundo quiere dinero. Money work. Se arregla con dinero. Con dinero. Money work. Yo digo las cosas como son. No quiero ninguna aceptación. Tampoco vengo a pedir perdón porque mis sentimientos se volvieron la canción. Yeah. No me vale mucho como tú me ves. Sabes, tú me llegas solo a los pies. Para mí ser grande es un interés. Ser un buen humano para mí es un deber. El dinero ya lo veré. No vendo mi alma, lo lograré. Seré el más grande, no olvidaré de dónde vengo ni cómo voy. Money work. Yeah. El mundo quiere dinero. Yeah, yeah. Money work. Se arregla con dinero. Yeah. Money work. De corazón. La plata no te hace ser feliz. Yeah, yeah, de corazón. De corazón. Yeah. La plata no te hace ser feliz. Money work. El mundo quiere dinero.
What's up, everybody? Welcome to the close of the week, Friday close live stream. This has been an interesting week. No matter where you sit or where you're trading, it has been quite interesting. Quite interesting for me. I'm not going to complain about it just yet. I want to talk about some real stuff that's going on. I gave a talk earlier this week about Bitcoin leverage being at the highest point that it's ever been in history, as far as we have data on. I want to talk about the SPY, the market as a whole, the different resistance levels that it got up to, as well as the relationship that it had with the VIX, which would have been able to tell you where these tops and bottoms might have been. We'll review some trades and talk about having some hard times. I was being totally honest with you guys. I almost didn't do the live stream today because, man, I've had a rough week. Last week, I was up several percent, and this week it is down. But that's trading. That's trading. If anyone comes on and tells you that that's not the case, that they're always making money every week, every day, every month, they're lying. They're lying. That's the game that you're in is about it's gains and losses and managing those losses and those things right there. So if you have questions, I'm going to have the chats open for everybody on TradingView and everybody on the YouTube. Let me pull that up so that I have that on my screen. All right. So if you got questions about some charts and things like that, I'm going to open it up. I've got topics that I'm going to talk about. Like I said, nobody has anything, then I'll just talk about what I want to talk about. We'll start off with on a light note. Somebody sent me this in one of the chat rooms that I'm a member of right here. It's Peter Schiff and fighting against Bitcoin. By the way. Peter Schiff is defeated. Yeah. Well, let's just take a look right here. So Bitcoin. Oh, why is that like that? Drawings. Oh, because I got on the 2 hour. So yeah, Peter Schiff has been a long time gold bug, and every single week he has a live stream where he talks about how inflation is just going nuts and how you have to buy gold for inflation. But you always have to think whenever he talks, it's buy his gold. And so all this time he's been talking about gold, 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 because that's the hedge against inflation. But despite all these inflation fears, I mean, gold, it's going up. It has been going up for a few years now, but it's just not seeing the kind of outsized reward that cryptocurrency has had. So that's the big debate. And the funny thing is the fact that his son is trying to make a name. I don't know if he's trying to make a name for himself or not, but he's going against his dad by investing his money into cryptocurrency. So that's always a fun thing to watch. So let's start off by following up on a talk that I gave earlier this week at a Bitcoin meetup, because I think this is actually the most important thing going on in cryptocurrency and Bitcoin especially. And this is the longs versus the shorts. Now, I'll dig into a little more detail about what each of these things are. So at the top here, we have the price of Bitcoin on the daily, a bar chart. And below it, you see the aggregate amount of Bitcoin that is on leveraged long positions. And then below that, we have Bitcoin that is in leveraged short positions. Now, this is not the number of people that have cold wallets of storage of Bitcoin, obviously not. But on Bitfinex, because that's where the data is drawn from, there are 52,000 Bitcoin, give or take, that are in leveraged long positions. That means that people have whatever amount they have in their account, but these are the margin longs that they have. So it can be anywhere from less than one Bitcoin. It can be multiples of that. You don't really know where people's leverages are, but you can guess. You can guess that probably they're anywhere from 2 to 1 leverage or greater. And we are now at this point, if we look back at all the history we have of the longs going back to 2017, it's at record highs. So more people have taken out leveraged long positions on Bitcoin than at any point in, as long as we have data from Bitfinex to this effect. Now, shorts have always been, dicey as well, but we're also having elevated shorts. So the ratio is about 3 to 1 right now. There's actually a good website for visualizing this, and I want to look at that as well as some of the others. So this is datamish.com. It's basically going to show the same thing in different ways for the leverage positions. So right now, again, we see here the green line that longs are at all-time highs and shorts are pretty elevated, and the white line is price. If we look at the percent longs and shorts, and we go back and look pretty much for the last half year, we can even go back a little bit further, the 360 days, you'll see that there's not that much of a variance. It's usually about 80% of the people on leverage are long versus short. So there's not really a unique imbalance, but what is unique is just the total volume of leverage that is being used right now in Bitcoin. If we look, I was curious about this to see what do the other cryptocurrencies look like. Well, there's nothing really crazy going on in Litecoin at this moment. You can dig into this a little more if you want to, datamish.com. What about Ethereum, which would be the second most popular? There's a weird data spike in here, but there's actually proportionally more people short Ethereum than there are long. And Cardano, Monero, what we have data on, there's really not a really large imbalance as much as there is Bitcoin. So Bitcoin is kind of interesting in that regard. It's just a lot of people are betting on Bitcoin going up from this point on leverage. Another thing that's interesting about what's going on is that the interest rate for this leverage is at one of the lowest points it has been in a very long time. That means a lot of people that have their Bitcoin on Bitfinex are offering it to other people to take on this leverage. And so you can see how it does have a sort of inverse correlation. More people are offering up the leverage, the interest rate is less. So it's actually cheaper to borrow Bitcoin than it ever has been. Because I think, if I'm going to speculate, people are wanting to hold their Bitcoin at this point, which is really supported by the anecdotal market sentiment that I take from people. And rather than leverage it themselves or sell at this point, they're going to hold on to their coins and they're going to offer it up to other people that want to take on leverage. And so that is the current state right now. Now, why I think this is important is to note is because it's becoming somewhat of a tinderbox. Now, this in isolation doesn't tell us which way Bitcoin is going to go. That's not the purpose of me pointing this out, to say that this means it's going to go long or this means it's going to go short. But even if I didn't have this leverage data in front of me, I would know just based on trading for many, many years that something like this, a pattern like this, a consolidation, and you can draw horizontals and diagonals and everything to make is a consolidation. It is a time when people are getting bored. Right now is the lowest trading volume in the last year when it comes to cryptocurrency in general. People have gotten bored. And I don't blame them for getting bored, but now is not the time for you to be getting bored. You actually have to stay very vigilant for opportunity. I'm not going to say long, I'm not going to say short, but when no one else is looking, that is the time when real traders need to have their attention fixed on the market. Set alerts, have them go to your email, have them go to your phone. Don't be sleeping because everyone else is. There will be a breakout of this consolidation. And the longer that it consolidates, the tighter it gets. It is inversely proportional to how violent the move out of it will be. If you go back and look at history of consolidations, the tighter it gets, the more it wedges. When it finally breaks out, it goes fast. And that is backed up by looking at the all-time high leverage positions. There's so much more than just the spot price going into whatever breaks out of this consolidation. So be aware. I don't know when it's going to break out, but you have to be watching. So that's what I think is the most important fundamental thing going on in crypto right now. Last week we talked about the stock to flow. It's a model, but this is a fundamental underpinning in what's going to move price. Sareem talking about gold, played gold for 2 weeks right after the crash. End of day, I'd buy and sell it at the open. Did this for struggling 2 weeks, made good returns. Yeah. So if you've got a strategy that you're working, keep doing it. That's a good thing. So let's go back and take a look at SPY, because today was, in the grand scheme of things, if we're looking here on the weekly, was today that bad? Was this week that bad? Not really. We've had worse. On the day here, what we were looking at, and I posted on TradingView earlier or yesterday, from here up to here, we got a really, really nice hold of the 50% retracement right around here. Now, was it going to retest the top? It could have, but it did not. But in the short term, it did hold that level. And then, of course, it came up and we had what we had going on today. So one of the things I've been talking to people last week and this week when it comes to trying to time the SPY, trying to time the market, you have to look at the VIX. And so while this was going on, I think one of the things that was really key to look at was the VIX. Now, the VIX, I'll tell you what it is. The VIX is an instrument that tracks the short-term options, the 30 days from expiration options of the SPY. That means it's a representative of implied volatility of these options in the near term within 1 month. When the market goes down, typically volatility increases. It's the fear index. That's what it's measuring. Implied volatility is measuring people's perception of where the market's going to go, how volatile it's going to be. And what's interesting is that the VIX can set up levels itself. One of the key levels that it set up here was going back to July the 2nd. Now, on July the 2nd, we had a short term right about here. We had a short term market all-time high. Of course, we've broken it now and gotten volatile from that, but that was July the 2nd. It was a Friday a few weeks ago. And so at that same point, VIX made not an all-time low, but a low for the year. We had a move up on the VIX from there that basically created a support at 16. This becomes very important because if you look over the last several weeks, from the 6th of July up until even this very morning, it has held that 16 level. And then what becomes very interesting is when you look at this in comparison. Let me make this where we see the extended hours, makes it a little bit clearer. Today, once we hit that 16 level right at the open about 9:30, was basically where the SPY actually topped out as well, and then reversed off of that. And if you look at some of these other points where the VIX down here was at a resistance, there's resistance based on the wider move from the low of the VIX up to the high that it set on this down move of the 8th of July. It hit it and held it as support. And so this key level here with the SPY also matched up with a key level of the VIX. That's pretty cool. And you'll see that at the times where it hit the level, the last all-time high, VIX hit 16. That was on the 14th of July. Then again, the all-time high before that, on the 13th, was where VIX was bouncing up against this support. And so if you're looking at the SPY, if you're trying to trade the SPY, you have to look at the VIX too. It can give you these key timing levels because, if we're looking here at the SPY, like, why did it top out right here? Well, it's not at my favorite 50% level. Maybe it's at a 68%. Maybe it's at a moving average. I don't know. But the VIX was at a level. And so when you get to these points and you see this confluence of both the VIX, the volatility, and the SPY, that's when you need to react. It's a very reliable thing to watch for. And so if you're trading the SPY, you really have to look at the VIX. It's a great tool for that. So again, if you guys have questions about what I'm talking about, I'm here to share what I know. I mean, this is why I do this. I enjoy talking to traders. I enjoy building a community on my Discord of active traders, not rocket emojis, to the moon, stuff like that. People that are actually concerned about risk, growing their capital. These are the people that I want to talk to and have in a circle to bounce ideas off of and get ideas. We've had some really, really smart professional financial managers have joined. I'm really happy to have them because I want to grow just as I want to help other people grow. So again, ask questions if you want. I'm on TradingView or the YouTube. So what is the next thing on my list here that I was going to talk about? Take a drink here. So as I said going into this week was hard. I committed myself to do this live stream every 4 p.m. every Friday to have consistency, because consistency is key in anything in life and especially in trading. And as the morning was progressing, I'll be honest, I thought about just saying no, but it's not that big a deal. See, when you've been trading for a long time, you've been through rough patches and good patches. And even though it feels bad at the time, I've made it back. And that's what I have to remind myself of. And that's what you, if you're having a hard time, should remind yourself of. But if you're just starting out and you're facing a hard time, I get it. I totally get it. That you don't really have confirmation of your abilities. You may doubt your trading abilities because obviously your P&L is showing you that you suck this week. It's okay. It's okay. I had someone at the recent meetup I was at asked me, hey, I want to set up a trading account. And, how much money should I put into it? And I told him, well, just assume whatever you're going to put into it is gone. And he was like, what do you mean? What do you mean? I said, well, if this is your first trading account, you're going to blow it up. And he looked at me perplexed. He's like, well, can't you teach me how to not do that? Can't you, aren't there ways to avoid that? And no, you have to blow up your first account. I'm just going to say it. You have to blow up your first account as a trader. Otherwise, you're not going to respect risk. It's just that simple. I blew up my first. I started in Forex many, many years ago. And I took a good person's salary in loss over the first 2 years. It's not fun. It made me almost take up smoking, but I quit, fortunately. It's stressful, but it teaches you that whatever you were doing to start with is not necessarily what you're going to end with, but you have to learn. And the worst thing that can happen to you as this beginning trader, I truly believe, is make money. I think if you made a bunch of money in the first month or even the first year of trading, especially if you came in last year and you long Tesla or Apple and you made a ton of money, you came into this year and it was a much harder year for you because you didn't really learn what trading was about. You thought you knew what trading was about, but you didn't. And good times and bad times are not unique to you as a trader, I promise you. I like to watch all the financial documentaries I can find on YouTube, and I'm going to share this right here. Fair use, hopefully. Fair use, fair use. This is about Dan Loeb, I guess that's pronounced his name, who is a really big hedge fund manager. And really brief clip about his experience around 2000.
By the end of 2000, he beat the market by 26.2%. Over the next few years, Third Point consistently beat the market as the fund grew bigger than ever. Coming in 2007, Third Point was going strong. Dave Baring was a company that manufactures testing machinery, supplies for the medical diagnostics industry. In 2003, the company was in financial distress. As a result, its bond price was trading significantly below face value. Dentlope took a bet on this company, believing that the business will recover soon. And just as predicted, the company did come back, making 3.600% profit in its investment. But little did Lope know, in just a few months, the biggest financial storm would bring him to his knees.
Over the weekend, Lehman Brothers, one of the most venerable and biggest investment banks, was forced to declare itself bankrupt. Another, Merrill Lynch, was forced to sell itself. Today, crisis talks are underway.
World financial markets are way down today following dramatic developments.
The financial crisis brought on the worst year in Third Point's history. In September, just before Lehman Brothers collapsed, Third Point had about $5 billion under management, with earnings up 4% for the year. It ended the year down 30%.
It was a mess. I just thought, God, I spent 13 years building this business, and I felt like it was just slipping between my fingers. The organization was demoralized. I had huge overhead. Then the redemptions started coming in, so we lost, a third of our capital, about $1.4 billion in redemptions at the end of the year. So I thought, well, at least I have my health.
Dentlope quickly discovered, although the market was in turmoil, it also presented him with a lot of opportunities, the ones his fund was most equipped to exploit.
February came along and we felt really good again. We were up 4%, the market was down 25%. We made all these smart defensive bets. We did what we're supposed to do. We protected our capital during a tough time.
By mid-2009, there was still a lot of uncertainties in the market.
Well, I don't see how anything's changed, to be honest. We still have the same problems that we had before.
But Lope was more bullish than ever. He felt strongly that the market should only go up from here.
The turning point for me was Citigroup Pref Common Exchange deal. Citigroup has hundreds of billions of dollars of liabilities. It was insolvent for all intents and purposes, but they did an interesting transaction where they exchanged preferred stock, which is at the bottom of the capital structure, into equity. They also got a lot of government goodies guaranteeing things, but it gave them the capital that, combined with their own earnings power, made Citigroup a financially viable entity going forward.
He started actively buying bank debts. 8 months later, at the end of 2009, Third Point was up 45%. Third Point survived.
So credit to this channel right here, FinAIUS. So good little mini documentary there. It's, if you guys have probably seen, if you haven't, watched that movie Big Short, because it's funny. He takes clips there and does that kind of a face. What is it? I can't remember what it's called. The deep fake on the faces and things like that. But he's using Michael Burry, or Christian Bale playing Michael Burry. There was a point there in that movie where he was down on his fund, double-digit percents. And what happens when these fund managers run into these times is people want their money back. They have redemptions, and that's got to be tough because people are losing faith in your ability as a trader. I mean, that's what they are. I mean, these guys are traders just like anybody else. They're taking on risk. They're managing risk just like you are, even if you're trading a small account. I mean, they're doing more complicated things, but at the end of the day, they're still on the line. Their money's still on the line to make money. You get paid to take risk. There's no other way to make money. You can buy bonds, but yeah, that's not beating inflation. So you really have to take to heart that anyone that is taking on risk is facing the same kind of hurdles that you are. And that's why you just have to be very, very disciplined. So there's a few things that both in practicality this week and in retrospect could have been done differently. I got to be honestly, I came into this week, the end of last week, feeling like I had a little too long delta, SPY weighted delta. Basically, what you can do, depending on the platform, is you can do a beta weighting of your portfolio and beta weight it to the SPY, and that will tell you, based on the correlations of the individual components of your portfolio, how long you are the market. And so I was looking for short opportunities, and there were a few actually, and they were actually in tech. I think I definitely was the 13th of this week. Was that a Wednesday? Was that Wednesday? No, that was a Tuesday. Tuesday, because I like them here. I'll take off the secondaries. This popped up on my scanner on Tesla. Actually, I even got it down at a 5-minute right here. It was a fantastic opportunity to short Tesla. I originally tried to do the shares, but my brokerage wouldn't let me. So I had to find some options and didn't really get what I wanted. But this is an example of where if you find yourself at all-time highs in the market, and by the way, we're going to talk about that here in just a second, about when the market's going to crash. And that's going to be one topic I want to talk about because a lot of people bring that up. If you find yourself a little too long in the market, then you should start looking for short delta in things that are either weak or you find short setups. And so on Tuesday, before all this down move in the SPY happened, Tesla set this up. Tesla set up something that I really like to see, which is a really volatile spike at the open. And it's coming off of a quadruple top. And if we look on the broader picture, if we go up to the daily, yeah, it's actually let's see, hold on, 30-minute. Yeah, it's actually right around this other consolidation that it's set in the end of June. So you have a lot of price action here at this 686 level. Plus, at the open, you have a big spike up, which means that it drew a lot of people into long positions and then slammed back down. These are really good setups because this is where you see people are trapped. Think about if you have been in a trade. Let's just go back here and look at, see if the 1 minute will help us out here. So if we go here, and this is Tesla on the 1 minute Tuesday morning, right at the open. You got a nice solid break of these two levels right here. So as a trader, you want to be long Tesla because you think Elon is an alien and he can do no wrong. And so you go long with a trade. And so as you're going through here, you're in the long, you're doing really well in these first 3 minutes, but boom, now it slams back inside the consolidation. What are traders going to do? Well, they're going to start to panic. And so their breakouts are not working. Their longs are not working. So when it gets to a situation like this, now you're in trouble because you've taken on a lot of risk with that breakout. And so what's going to start happening? Stops are going to be shaken out. And there was a really good opportunity right here on the 5 minute on a little pullback to the top of this consolidation right before it went down. And we saw this in the Discord, and this would have been a great opportunity to set up some sort of a short position to hedge whatever long exposure you have. And so even if you're losing on your longs, you now have a short position in something that is offsetting and keeping your portfolio hopefully close to delta neutral. And then if you want to, once you're at a market bottom and all your shorts have gone to crap, all your longs have gone to crap, now you have a short that you can take profit on and then hopefully ride it back up with some long entries. And so if you're going to be trading multiple instruments, and it's very important to trade multiple instruments. I really believe that if people are just focused on trading indexes and index options, they are handicapping themselves. I mean, there's some people that's all they focus on. And I'm not going to say that it doesn't work for them. If it does, it works. But I find a lot better success in trying to play individual stocks because you just have more opportunities that set up if you're looking at multiple instruments and you're looking for the same kind of technical patterns in these individual instruments. Another one that was a good potential hedge was AMD. AMD had a, was this an all-time? No, it wasn't the all-time high, but you were basically coming up to a potential head and shoulders pattern right around, let's see, the beginning of July. And you had a down move here on from July 7th to July 8th, which created another situation that I like to see here, which was right about there. Again, one of these volatile spikes at the open on the 12th of July at a 50% retracement level from this very clear move. And so at this point right here, put in an entry order somewhere right around there. Boom, could have got it right at the top of the consolidation here, somewhere in this point right here. And now again, you've got some short delta to hedge your long exposure, which would have worked out pretty well. Doesn't even have to be in tech. There was actually one from about 2 weeks ago in AES. It did another spike at a 50% level here. This is more on the 2-hour, but coming off of the highs it set in April down to the lows right here, right around the end of June, it set up a position here. Now, in June, most people weren't worried because we were still making all-time highs. But that's precisely when you might want to be looking for shorts to hedge. And here's the thing. I have kind of a love-hate relationship with short setups, especially last year, where I kind of had to develop my feel for them. My shorts are typically going to be at least, or excuse me, at most, half of what I'm putting on my longs, simply because taking on shorts is a lower probability most of the time. And my losing rate on the shorts that I take is higher than my longs based on my own track record. And so when I see shorts, I'm always a little, I'll admit it, nervous to put them on, but it's really important, especially in weeks like this, that you put on some short positions to hedge what long exposure you have. It's great if you're super long a bunch of stocks or a bunch of positions, whatever they may be. It's great when the market goes in your favor, but it doesn't always go in your favor. And so you really kind of have to feed the beast, so to speak, with some trades, some short trades that, you know, they may lose, they may get stopped out, but they're there in case you have a week like this week where you really, really need to be hedged, especially when the market's coming up to all-time highs. You know, I don't believe anyone should be in all cash. I don't believe anyone should be fully long or short. I think you just have to be net long in a bull market, but never go net short or flat, because then you're going to miss out. And that's something that I wanted to segue into. Let me check the chat real quick to see if there's any questions. You're welcome about the SPY VIX correlation. That's why I share this, because these are things that I've learned over the years. Actually, my mentor taught me about it and made me aware of it, so I'm sharing it with you all as well. It's very key to trade the SPY. You need to be looking at the VIX. So where was that? I had a good thing. Okay, so let me do a Google search for here we go. So this is the article that I was looking at right here. I think, yes. Okay. So earlier today, I got a all too common message in Discord. Someone joined the Discord and sent me a personal message. Appreciate it. More than happy to answer your questions. And they were very concerned because roundabout, I think it was March, they said they went flat in the market because they were worried. They were fearful of, you know, whatever. And now they've missed out on those gains that we've seen all year. The SPY, what is it up year to date? It's probably even right now up very good double digits. I bet it's up about 15. Let's see. Let's just say the open here on the 4th of January, almost 14.82% year to date. So that's above average. You know how they say you can expect to make 7 to 8% per year on average. That's including all the down moves. We are in a bullish year, regardless of whatever happened this week. Still pretty bullish. I mean, look at that chart. I mean, it's still bullish. I mean, anything else you would not be panicking on. It's just, I think a lot of traders, myself included, were really deep into the weeds with individual stocks in our positions. And so you got to maintain perspective. But also within that perspective, you have to understand what is the probability of a correction. And I've said this to lots of people, and I said this to the person that contacted me today. The reason I think a lot of people are fearful is because fear sells. And the media, which I don't like financial media. I don't like a lot of the YouTubers out there. I'll throw salt on them because most of them are putting in big, bold red letters, is the crash coming? And other BS like that, because that's what draws people in. That's what gets you up to a bunch of views. But I don't care about that. I want to be real as a first priority. And what's real is that they're not looking to inform. The media and other YouTubers are not looking to inform people of real actionable material and real strategies. They are looking to get attention. They're looking to get views. They're looking to keep people engaged, keep people's eyes on them. And so what they're going to do is they're going to sell fear. That's their primary goal, is to sell advertisements, and people are going to be more attracted to fear. And so on any given day, they are writing some news piece about why the market is going to crash. But what are the actual statistics around the market crashing? Well, if you look, I was reading through this article right here by Schwab. It has some pretty good statistics, but you have a decline of at least 10% in 11 out of 20 years. So 55% of the time. Now, it's probably a little bit higher because we had one in 2020, but let's just say that 60% of the time, 60% of the time, you're going to get a 10% correction in any given year. That's a high probability. It is. So let's flip that on its head. That means that most of the time, if you're patient, every year, you're going to get a really good opportunity to buy. Think about that. Now, the other statistic is that we get a major bear market correction, which is somewhere around 30 to, I guess in 2008, it was about 50%. You get one of those once a decade. So what's your probability of a bear market happening in any given year? Roughly 10%. It's a very low probability. But you have people out there positioning themselves, going flat in the market because they think that it's a certainty because some expert told them so. No. What happens when you go flat in the market, and I talked about this in my live stream last week, is you miss out on the gains. Let's just say that you thought that the market was going to take a dump because whatever reasons. Let's say on February, where we made an all-time high, and then right at the end of January, boom, there was all that GME. It was when we had the short squeeze thing happen on January the 27th. If you got spooked and you said, oh, all these hedge funds, they're going to be liquidating their positions to cover their margins, blah, 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 blah. If you would have gone short at this point right here, and excuse me, not gone short. If you had gone flat, if you'd taken your 401k to cash, your IRAs to cash, and you'd said, I'm scared, I'm not going to take on this risk. There is a high probability that you would have avoided a 10% move. Well, not exactly 10%, because from the high up to here, you'd already given up 4%. So at this point, you're not really saving yourself 10%. You're saving yourself only about 6% on average. And again, you're still operating in this probability, but there's a 40% chance that it's not going to happen. So if you would have gotten out at that point, what you would have missed out on from that point was, once it finishes, you would have missed out on 16%. So you had a high probability of closing out your portfolio there, of saving yourself a 6% drawdown. Basically, according to the statistics, that's what going flat and going to cash would have, in the highest of probabilities, saved you. But what actually ended up happening was you cost yourself 16% of opportunity. And this is what happens when people go to cash out of fear or out of some guru telling them that whatever reason the market is going to crash. People miss out on more gains than they potentially would have lost. Now, the other more extreme version of the market going to crash is the doomer community, however you want to define that, but people that think that the dollar is going to go to zero, that the Illuminati is driving the world economy, to the ground so that they can take over and whatever. The lizard people, I don't know. What I think about conspiracy theories is they're all BS, because I know people, and people can't even agree on lunch, much less in multi-generational international conspiracies. I don't think so. But yeah, lizards. Anyway, so let's just think about it in this term. So what is the probability of the world ending? Well, what would we say is the world ending? Well, let's just say I, and probably a lot of my viewers, according to statistics, live in the United States. Okay. And there's a very common trope that the average age of a empire to fall. Let's see, average lifespan of a cat, an empire, is round about 250 years. Okay, so people think that we're coming up on that, but again, this is average. But even assuming that this is average, what probability does that give us that in any given year that it is going to be the end of the world? Well, basically a 0.4% in any given year, the world is going to end. It's not zero, I'll give you that. But when people are taking in all this information about how surely the world is going to, I have some very good friends that are near and dear to me that have been convinced for the last decade that I've known them that the end is nigh. And well, the world was here before I got here, and it will probably be here after I'm gone. So I'm just going to assume that we're going to keep doing this whole civilization experiment and operate under the assumption that there's a 99.6% chance that this won't be the year that the world ends. Also, I'm going to operate on the 90% chance that this is not the year that we will have a major bear market. Also kind of helps that we had one last year. Yes, that was within that decade cycle. So don't listen to the BS about how the world is ending, how a minus 1.5% correction in the SPY is the harbinger of the end. What's interesting when I go back and I think about my trading history, 2018 was a very choppy year, was when the market actually does begin to crash. There's really no reason that the media has for it. They're usually scrambling to come up with narratives. So there's really nothing going on in the world right now that is that bad. Like, we're not at war. This is not the 60s. We're not in Vietnam. We're not facing, the threat of nuclear annihilation. I mean, the things that really crash the market are black swan events. And what makes them black swan events is that they come out of left field. They're unexpected. People are not hedged against it. Real estate was such a big deal because everyone up until 2008 operated under the assumption that real estate never went down. It was a surefire bet. And so, sure, take on lots and lots of leverage and then build very complicated products upon this solid foundation. Everyone thought it was a safe bet, and that's why it was so catastrophic. Fast forward to 2020 when the market was crashing from COVID. I had so many friends that were, sitting there wanting to get real estate cheap because they thought this was their opportunity. They missed 2008's down market. They wanted to buy real estate. But I told them at the time, the fact that you're looking to buy real estate now means that there is demand. And therefore, it's kind of hard to have a crash when people are willing to buy. I'll save talking about real estate till another time, but real estate deserves its own video and analysis right now, especially in my local market and what's coming up. So one more trading thing that I had on my list that I wanted to talk about, and that is 11:30 reversals. So one of the things that we were looking at today was at 11:30, there was a big move in the market that we thought it was a move, an inflection point right here from this down move. And 11:30 is something that, for homework, I want you guys to go back and look at to see how often around the 11:30 mark you get a inflection, not only in the SPY, but in other markets as well. And I'll give you a little hint to that. And the reason is because, well, that's exactly the time that the London markets close. Volume dries up, and the momentum that built up in the morning tends to taper off. Also, people go to lunch, yada yada yada. So we'll do more of a dig into that. But I've talked myself out right now. Let me look and see if there's any final questions. If you got one, get them in now. So in TradingView, GSW asked, do you like to talk about crypto like Polkadot? Well, in general, when I talk about things in crypto, I talk about things that are very well established. And by that, I mean they've been around for many years, not just 1 year, not just 2 years, but things like Bitcoin, Ethereum, Monero, Litecoin. These are currencies that have a lot of volume. And so if you're going to trade these currencies, let's see, is this Polkadot? I think it's DOT. If you're going to trade these, then you need to have some meaningful price action. And if I'm looking at this right here, this would qualify as some meaningful price action. It's actually trending down, but that's just the nature of the alt season. Oof. Polkadot, if this is what you're talking about, GSW? If I'm going to give you my unbiased analysis on this, breaking these lows right here, you're not in a good situation. So yeah, you got a clear level of support that it's breaking out right here. It could just be a shakeout, but you might want to consider de-risking on this one, actually. Is that a symbol, Jen? Rug? Yeah, this is some really bad price action. I think you're just joking about that. All right. Any more questions? Yeah, sorry, man, if you're long that. So I'm just telling you what the chart comes up. Oh, a rug pull. Yeah. Yeah, DeFi is not really my thing. All right. All right. Thanks for joining me, guys. I'll have the live stream. It should post. Takes a few minutes, hours to process, but appreciate you joining me. If you had a hard week, take a break this weekend. Come back next weekend fresh. We'll see you next time.